Starting now, Equity Mates, with thanks to our mates at Spaceship.
Another episode of Equity Mates. My name is Bryce. As always, I'm joined by my equity buddy Ren. How are you going?
I'm very good, Bryce. Back for another Tuesday.
Yeah.
Big week for us this week. A lot happening in the US. We talked about earnings season over there yesterday. A lot happening here at home as well, and we've got an expert in today to help us make sense of it all.
We do. It is our pleasure to welcome a friend of the show, Jessica Amir from Bell Direct, to our studio. Welcome, Jess.
Thanks for having me. This is awesome. Love what you've done with the place.
Yes, so do we. Yes. So, Jess, you're covering markets all day, every day over at Bell Direct. So what we thought we would do today is go through what is happening. We've just kicked off the month of May. Historically, there's some... I guess, what is the saying? Go away, sell in May, go away.
Yes.
So we'll touch on that. We'll have a look at some of the push-pull factors that we're seeing in the market at the moment, some of the broader themes around the commodity boom, and then look at the negative months of May and June as potentially an investment opportunity.
Sounds good.
Nice.
I'm on board.
So, Jess, you cringed when Bryce said sell in May and go away. Let's start there. Why? I assume you're not a fan of the saying based on the reaction.
I hate it.
Why not?
Why not? Well, do you follow the herd? Warren Buffett doesn't like to follow the herd. But you hear a lot of commentators say, sell in May and go away. Well, the thing is, historically, if you look back at the ASX 200 returns, the month of May, it's not one of our best. It's not the worst, but you pretty much see the market go sideways. It does dip historically. Add up all the months divided by the average. The market on average loses about 0.5% in May.
Not a lot.
No,
It's not
a lot.
worth selling for.
Who's selling? and then in June, the market's historically tracked flat. So it's a really good opportunity to kind of look at your tools, what's in your portfolio, and then reassess where it's at. Especially at the moment, what we historically see and what we are seeing, we've seen the month of May kick off. As it historically goes, investors are pretty much, looking at their portfolio and then looking to make tax positions because we're heading into the end of financial year in June. Sorry.
No, that's all right. So I was just going to say, so what does that actually, for someone who's just started their journey, what does that actually mean if they're looking at their tax positions, they're selling, and what impact does that have on the market?
Yeah. So that's why you do hear people, so I'll just answer your question in reverse. You hear the old adage, sell in May and go away, because people are starting to work their tax. So what that means is they've made some pretty cracking gains in some stocks for the financial year. So we spoke about the mining boom. You spoke about the mining boom earlier. We know tech's had an exceptional rally on the back of the shift to working from home. So these sectors have done really well. So investors probably locked in some of those gains, sold down. They've got a big capital gains tax. They don't really want to pay tax on all of that. So then you look at your portfolio and go, okay, well, what's not doing really well? I'm going to sell that and I'm going to make a loss on that. My loss is going to be this, and then I'm going to offset that against my gain. So I'm basically paying less tax at the end of financial year.
Yeah.
So that's what tax loss selling is.
Is it something that you would recommend for a beginner investor?
I think it's advantageous to actually do, to perhaps speak to an advisor.
Yeah.
And it's always a good time in the market this time of year to reassess your portfolio as we, head to the end of financial year. So I think investors should always, regardless of how experienced they are or not, look at their positions, look at their portfolios. Do they still have earnings momentum likely to continue? Are they in a downward trajectory? Always you want to see what's going to happen to future earnings in a sector that you're invested into.
Yeah.
So why not look now?
Use it as a time, yeah.
Yeah.
I'm glad you started that answer with they should speak to a financial advisor though, because we are not giving tax advice on this show.
No.
So if you're interested in that, speak to a financial advisor. So Jess, we're into May now. What are we seeing in the first couple of days of May? Anything caught your eye?
Yeah, so we're seeing a lot of, I guess, push and pull factors, as you were touching on earlier. So the push factors, by that I mean what's pushing the market higher and what's keeping this momentum going. So we're seeing, and we have seen better than expected economic news come through consistently. We saw that in Australia, we're seeing that in the US, so markets like better than expected economic news. So that is pushing, all in all, most sectors and the broad market higher. And then the pull factors, segue, backtrack on that. Yesterday we saw Westpac report better than expected numbers. We'll get some of the big banks later this week, CBA next week. So better than expected company news is another push factor. So likely to push momentum, push the market higher. Pull factors. So unfortunately, it's a horrible situation. What's going on in India and Brazil? COVID spikes. That's causing the energy price, the oil price, to pull back, and then that also causes investors to take profits as well. So this push-pull of better than expected economic news and company news is pushing the market higher, and then you've got pull factors that are coming out every 2 days or so. But what we are seeing, all in all, is investors are not consecutively selling; they're actually buying the dip. And so this means it's kind of abating those fears where you've got those naysayers saying, "Hey, we're probably going to pull back. We're probably going to head to a bear market." But the thinking now is because investors are constantly buying the dip, you're getting this nice push-pull where the market's, on a nice trajectory, and that momentum is continuing, which is what you want. And this is in line with what consensus expectations are for earnings and for a positive next 12 months for the Aussie share market and the US.
Yeah, right. It feels like the opportunity to buy dips these days are getting shorter and shorter because you have a dip for a couple of days and then it's gone, it's back up, and you're like, damn it.
That's so true.
Missed
so
the dip.
true.
It's that,
so
it's
true.
that buy the dip meme really having an effect on markets.
Yeah, it is crazy. But so we're also seeing a bit of a commodity boom. I'm assuming we're talking the iron ore price here. We're going to speak about lumber later in the week as well, the price
Nice.
of wood. What are you seeing on your side in terms of the commodity prices?
I guess there's a couple of factors for this, a trifecta. So the first one's iron ore, secondly copper, and then the shiniest of them all, I guess you could say, it's not gold, it's lithium. This week, we saw some better than expected numbers come out of China. So steel futures, so the price that they think that future will be worth in the future is based on future orders. So that rose more than expected, and that supports the iron ore price. The iron ore price is chasing down a 10-year high.
Yeah.
So we're almost there.
Yeah.
So that's putting a lot of fire up the buttocks of a lot of these iron ore majors, and also the smaller iron ore players as well, like magnetite mines, MGT. So you're seeing a lot of these small iron ore players have a lot of momentum. And then the second one, guys, is so copper. The copper price hit an all-time high last week. And the thinking is that copper's got more room to run because it's all about this move to electric vehicles and a cleaner economy, and copper's used in so many things that we take for granted as well. It's used in the health industry, it's used to put together buildings. And then lithium. On the back of all of us getting back to work, so EV sales are up. They've gone through the roof in China as well. And this massive demand is from China. So 30% of the cars, the EV cars in Australia, 30% of EV sales from the world go to China. So look out. So those three commodities are basically fueling gains in those three pockets on the ASX. And from a thematic perspective, that trajectory is likely to continue, and the analyst houses are backing that. From a technical perspective, if you look at the charts, all three of those charts, and most stocks that fall into those three categories, they're looking pretty bullish too. So
just as a retail investor, you might be hearing that lumber's hit an all-time high, lithium is running, iron ore is chasing a 10-year high, copper's hit an all-time high, wheat and corn both hit 6 and 7-year highs. Like, commodities are on a tear.
yeah.
If retail investors are thinking, well, how do I invest in these commodity gains, commodity runs? What would you tell retail investors? How should they think about investing in these companies that are really exposed to commodity prices?
That's a good question. So I think with any stock, I'd shift it back to the basics and stepping back and thinking about what do I actually want to invest in. So ultimately, what drives share price growth? It's essentially three core elements. So is the company in a growing industry? So yes. So is the company growing its market share? Its customer base? Does it have a competitive advantage? And then the third prong is, are their financials growing? And are they beating forecasts? So if I was to look at a stock in each of those sectors, I'd have to do some homework.
Yeah.
But the first one that comes to mind is an innovator, and that's Fortescue Metals. So the government, the Aussie government and the US government, on the back of Biden getting in, you really want to look at companies that are going that one step further. So Fortescue Metals, they're going into hydrogen. They're looking at, or potentially vying to be, one of the world's largest hydrogen producers. So to me, it's not just an iron ore major that produces quite a high grade of iron ore, but it's also going into this next leg, this clean green fighting machine leg.
Yeah.
So that's kind of what you want as well. And if you think about the company from what's called an ESG perspective, they're also leading the way, and they're in a lot of the top performing ETFs. Because they're such an innovative company, they're going to be pretty much self-sufficient in 9 years in terms of an ESG perspective.
Are there there would be, there's commodity ETFs, aren't there? Yeah, I haven't actually seen any, but I think it's a good way to get price access.
I just think the only thing to keep in mind if you're thinking about investing in commodities is that a lot of commodity prices move in cycles. And so, some of these have a long way to run potentially. Some of them have structural changes that mean they're going to be higher for longer, but they move in cycles. So it's just something to keep in mind.
That's exactly it. And if you don't want to stock pick or reassess your portfolio every quarter or half year, financial year, that's probably the best thing to do, is to look at or consider an ETF. There's clean commodity ETFs. There's various ETFs that are in the commodity space globally, also locally as well. So why not have a fund manager do the homework for you?
Yeah. Fortescue, pretty phenomenal company, I think. It's. I remember when it was down in the dumps not too long ago, and it's had a pretty phenomenal price rise. But anyway, so if we're looking at May and June to close out, Jess, it sounds like that we can expect the good times to keep rolling, despite, I guess, traditionally the market performing pretty flat. Is that how would you assess it?
Yes and no.
Nice.
It sounds more no than yes. You can tell prices.
Yeah, you can say no.
Yeah, I do all the time.
I think investors, with a little bit of a push sometimes from their accountants, they're kind of going to be shaking the tree at the moment.
Okay.
To move their portfolios at fund managers, which largely move the market. So they're going to be, enacting this tax loss end of financial year readjustment. So for investors, I guess like us, it's a really good opportunity to, let them, shake those branches, and then as stocks fall to the ground, it's a good opportunity for us to pick up some low-hanging fruit. So that's why I think for the long-term investor, perhaps people around our age, it's a really good opportunity to look at May and June as investment opportunities, and particularly in those stocks that are still undervalued. So we spoke about buying the dip. So travel and tourism, it's still pretty down. And there's a lot of headwinds there, but for the really patient long-term investor, once travel picks up, it's still, we don't know when it's going to be, but it's still, it's a fantastic opportunity. It is a once-in-a-lifetime opportunity if you're patient.
Yeah.
And then also commodities. I don't think commodities are going to slow down anytime soon. You've got the Chinese Silk Road project. So it's just absolutely non-stop. There's always opportunity, but yeah, you just have to pick those apples correctly.
Yeah. That's the challenge.
That is the challenge. Yeah.
If only it was that easy. But anyway, I think we've come to the end of our episode, Jess. So appreciate you coming on the show as always.
Thanks for having me.
Always enjoy you coming on Equity Mates, and hopefully we've been able to shed some light and value for those that are looking to buy or sell in May or June. So thank you very much.
Hopefully, thank you.
That brings us to the end of another episode of Equity Mates. As always, you can find out what we're doing on our website, equitymates.com, or you can contact us at contact@equitymates.com. And tomorrow we're back with Watchlist Wednesday.
That's right. We've got Henry Jennings from Markets Today joining us to talk about 3 stocks on his watch list. Then on Thursday, if you enjoyed that chat around commodities, we're going to be talking lumber in more detail. The hottest commodity in 2021 isn't NFTs, it's dead trees. So make sure you join us on Wednesday and on Thursday to round out the week of Equity Mates.
We'll see you then.
Equity Mates, with thanks to our mates at Spaceship.